Good evening, ladies and gentlemen. We are yet again live. The weeks, they just fly by, don't they? But it doesn't seem like we're lacking on any drama, whether political or market related. It seems like there's always volatility, especially coming into 2025. But I want to more particularly talk about the stock portfolio, stocks this week. We'll kick it off with a few Q&As, broad view the market, what's kind of happening over the weekend with crypto, and so much more in between. So if you're on a path to financial independence, if you damn well one day want to retire early, simply join me by hitting that subscribe. You guys are going to light me up this Sunday so we can take a look at what's going on in the markets for next week. First and foremost, are you even wearing any pants over there? Yeah, I know you can't really see much below the desk. I will say there's some days I'm not wearing pants. Today I'm wearing pants for sure. I'm not even wearing pajama pants today. I'm actually just wearing my usual sweats, the good old work from home life. But yeah, typically I got my pants on. Another Q&A here, and I want to talk about this briefly because these are kind of related to the videos we talked about and what went on in the videos this week, which is, I put 50% of my pay toward my mortgage, but it does include an extra $1,000 every month, trying to kill that mortgage faster because of high rates, though it is currently slightly higher than my rate. Now, we were talking about just kind of fast tracking the mortgage. A lot of people are struggling when it comes to delinquencies. They're not like explosive here in Ontario, but we saw a massive spike with mortgage renewals coming up. And it kind of comes back to that point of that rule of 30%, no more than 30% of your take home pay should be going to your mortgage because it's the only way you can live comfortably, to invest, spend on other things, travel, etc. And I'd like to know, are you spending more than 30% of your take home pay on your mortgage? The wife and I put a massive deposit down on this property, and we're trying to pay it off in the next 2 years. But even if we couldn't, and we were struggling or we lost our jobs, like the payments are well below 30% of our current take home. So we feel pretty comfortable in that position. But it's a fascinating question because I feel like people that buy real estate are largely uneducated and financially saying, and even in Ontario here, I feel like when properties on average are costing like $1 million, that a lot of people are going into that just completely saying, hey, if I can just afford the payments, who cares? I'll figure the rest of it out. And then, maybe there's couples like my wife and I, and then they lose their job. And then the nightmare ensues, especially when renewals come up and your interest rates skyrocketed like they did. Our interest rate's at 5.8%. So we're getting absolutely devastated on the interest rate, but not that it matters because, again, our mortgage is fairly small. But let's get into this because you guys have some Q&As. We're going to get into it as well. I just wanted to warm up with a few fun questions, comments that you guys have over the week. But we can kick it off with the markets, which have been a bit peculiar because we did finish kind of start of Friday going heavily into the red in the markets. And now we are starting to bounce back toward the end of Friday into the weekend, which is where we saw this massive oomph, because when I shared my portfolio overview on Friday, it did not include the massive run up that the S&P had into the end of the day, but that was primarily driven by the lower half of the market. It wasn't driven by the upper half. So this is where we saw the resilience and things like SCHD, a lot of the dividend ETFs, because big tech is laggard incredibly this week. I mean, I don't think we've seen a hit on tech this hard in quite a couple years, at least since the 2022 correction finally kind of came to its end. I mean, we've been on a trajectory up to the right, and I feel like tech is finally getting that major blow. And we'll talk more about tech in a moment. On the Canadian side of the border, however, and I should also mention too, we had some good earnings last week with tech. I mean, even NVIDIA's earnings were exceptional, yet the stock went down. And, similar to the Canadian side of the border, we saw the same thing with the banks. Banks posted really good numbers for the most part. It was a bit spattered, but some of them went down. They mostly ended flat, but we did see some rallying here at the end of the week with them. Like Royal Bank finished the week up 1%, BMO went up 4%, but nothing like that dramatic compared to like JP Morgan or some of the US banks that rallied excessively on the back of their earnings. We do see the pre-market, however, kind of struggling to go green. Can't tell. We're still in this extreme fear moment, apparently, but the markets are fighting to decide whether they're going to go green or not. It looks like the NASDAQ is just showing some signs of green, but this is like a fortune teller. I do not trust pre-market trading or, after hours or pre-market stuff. It's just kind of speculative at best because I've seen it go either which direction. But let's answer a few more Q&As. But first, before we get into the portfolio, we'll answer some Q&As, but I do want to finish up with the story of the weekend, which is obviously Donald Trump finally kind of tweeting out that basically they're going to be taking cryptocurrencies into kind of a reserve as promised. And it was kind of a spattered reaction because the first tweet was basically that they're going to include in the reserves XRP, SOL, and ADA, but they didn't include Bitcoin or Ethereum, which followed up 2 hours later another tweet or, on Truth Social or whatever, saying that they obviously are going to add Bitcoin and Ethereum. Now, this did revitalize the Bitcoin and ETH a little bit. It really pumped up Solana, some of those coins, XRP, but a lot of people were perplexed, and there's seems to be some insider trading. Not sure. A lot of people in my chat group were pointing out that, basically on Reddit or wherever this tweet came from, that today somebody opened $123 million long on ETH and 72 million long on Bitcoin with a 50x leverage. He knows something. And then sure enough, to follow this was the tweet from Trump. So there's been a lot of speculation if this was insider trading or what. But I'm shocked to see that Bitcoin didn't just fly up to all-time highs. Again, we saw some really good on the smaller cap coins, but I'm shocked that Bitcoin only pumped to 92. I really thought we would have been like back over 100K at least, but I feel like we're in a market where there's some breath going on with speculation. Kind of, we've gone through a really hype market. We could be reaching the end of this kind of excessive bull run. And, it kind of feels like we're having a hard time getting there at this point. So we need to see what the markets do, but it's not stopping me from buying, obviously, by any metric. But we'll talk about what I'm buying, what we're doing, but we'll answer a few Q&As. What do you think about Dollarama? We'll come around to some of the individual stocks. Yeah, overvalued stocks. That's kind of what it feels like. Regardless, you can get to being overbought. But I think it opens up buying opportunities, which we'll talk about with Google and stuff like that in a moment. Hey, do you foresee a dip in Canadian stocks on tariffs? I don't know. This is one of those things where it's like, right now the Canadian markets are starting to do very well. In the last year, they've actually outpaced the S&P for the most part. The Canadian markets have been exceptional because we've been cutting interest rates faster than the US has. And I think it's offered a bit of oomph to some of the interest payments and speculation on, a return to better earnings. But yeah, I can't play this, right? Like, I'm not going to sell stocks or not own Canadian stocks, regardless of tariffs or not. I'm just going to keep my exposure limited. And if you are, well, I mean, by limited, I only have 20% exposure to the Canadian markets. We keep it at that level. But I mean, I want to buy some individual Canadian stocks still. We bought TELUS already. I'd like to buy ones that are a little bit, agnostic or whatever to what the tariffs could do, because obviously oil could get hit, anything that has to do with the international shipping. But TELUS, the telecom giants, probably not going to feel the effect of tariffs. There's a lot of stocks out there like Hydro One, some of the utilities, Waste Connection, stocks that have US and Canadian operations, but it's not really like over border trade related. A lot of good companies like that out there. But doesn't it make sense to just invest the money versus paying off the mortgage, 4.5% versus, yeah. So this is the debate too, right? Like, I didn't want to put all my money into the mortgage. Obviously, that's why we took a mortgage. We could have just paid it off outright, and we would still had some money left over. But like, obviously, I wanted some investing capital left behind. And now I'm kind of in that kind of perplexing situation because the wife and I have a sizable amount of investments now, and we're like, we really don't want to sell the stocks to pay the mortgage off. So we're just kind of trying to keep our income to pay the mortgage down. But that's the debate, right? Because I'm one of those guys that I hate debt a lot. I'm not somebody that wants to live the next 30 years with a mortgage just so I can invest in the market. But I'm also a guy that recognizes I don't want all my money into real estate. So the way the wife and I do it is we tend to keep a 50-50 split. For every bit we pay down the mortgage, we want to make sure our investments are about matching the value of our equity in this property. So by the time we pay the equity and the mortgage off, our portfolio size will be the exact same. And then from there, our portfolio should scale beyond the value of the mortgage, obviously dependable on market conditions. Anything can change there. Made it up 5,300 shares in SCHD. Nice job. Holding SCHD has been tough, man. I feel like it's one of those things where everyone shits on it, and then all of a sudden it does well. And everyone's like, oh, God, SCHD is the best thing ever. Crypto is a scam, pump and dump. Yeah, we own a little bit of crypto, minor amount of crypto, nothing significant. I honestly feel like Bitcoin is the definition of a Ponzi scheme. It doesn't really have any underlying fundamentals. It's purely based on somebody else willing to pay for it. Yeah, if you want to do some international exchange with it, it's easier to send across the world than it is some other currencies. Outside of that, it's the only value I see in Bitcoin. However, I do see value in other cryptos that actually have some backing fundamentals. I see value in NFTs. I see value in a lot of things. I think Bitcoin's relatively insufficient. It's just a matter of it became the thing. And once it becomes a thing, everyone's going to build their ecosystem around it rather than saying, hey, there's another better thing, but there's not a lot of money in this other better thing. So we're not going to go chase that. We'll stick with the big thing, right? Honestly, Bitcoin will be around for as long as people are willing to hold it, but it has no value other than holding it. You can't actualize that value without selling it. That's the problem. You can't use it as trade. It's not currency. It's not what the initial idea of it was supposed to be. Those are my opinions, but I do own Bitcoin. I do think it's an absolute Ponzi, but I do own a bit of it. I own some Ethereum, nothing significant, just to hold it in case, we're horribly wrong and it goes to the moon. if it becomes a massive US reserve for some reason. I don't know. But I think it's purely insufficient and there's better coins out there personally, but time will change. Who the heck knows? The only Bitcoin I own is the Daily Shake Pay. Join the club. I'm still shaking, by the way. The insiders will get what we're talking about. Wait, you see value in NFTs. Can you explain that, please? Yeah, NFTs are really simple, man. They're smart contracts. They're brilliant they could completely wipe out anything to do with real estate transactions. They're much more efficient. In-game transactions, like let's say you own Fortnite and you get these limited drop skins. I would like to see those skins become NFTs that are tradable outside of the game, because it would offer infinite value to not only the people that produce the game, but people that grind the shit out of the game can actually trade this stuff in real value outside of a game. Once you turn Fortnite off, everything you put into that game is worthless. This is like the next evolution in video games, finance, anything contract related. Like even if you're going to do a music release, you could drop like 1 million albums or 1 million records basically as NFTs. And anytime those real authentic, albums get traded in that smart contract, you could have it so the initial creator, the artist, gets 15% of every trade. You could do that with Pokemon cards, everything. So the guy that creates the art gets infinite tradable value. The guy that buys the art actually owns it, and it's on a blockchain. It is recognized as this is the original piece. There's no forging it or faking it. I think NFTs are brilliant. They're just archaic still, and they have a long ways to go. But that's my thought on NFTs for those that are interested. I don't own any NFTs. I don't own any projects related to it. I'm just fascinated by it. I do some research or due diligence on it just to keep myself kind of caught up on where the crypto world's at. But do you think interest rates coming down in Canada with these tariffs? It depends. I think they'll come down regardless, because tariffs are, I don't know. You think they're inflationary or deflationary? That's a good question. Because I feel like it's a tough question, right? Because if Canada puts tariff on US products and we just decide to stop buying them as much, I don't know. It's such a tough debate because it could collapse the economy into a recession, which Tiff Macklin has already said would happen. We'd probably lose 2 to 3% of our GDP this year, which would be a massive, it'd be painful. Which means people would be losing their jobs. There'd be a lot of problems probably, and they'd lead them to cut rates. But at the same time, it should cause the value of things to go up. So I don't know. You're talking about a two-edged sword here. But putting that aside, I'll let you kind of contemplate and tell me what you think in the comments about it. But let's talk about the portfolio. And I want to get into the deeper conversations about the individual stocks, kind of questions, where the markets are at with my portfolio. Because in a market environment like this, I become ever more pleased with my exposure, especially with the combination between what the wife and I own as a unit, which you have to go into my private, my private courses to see that stuff. I try and keep the wife stuff relatively private, with the exception of people that are willing to pay for it. But still, I really like my personal exposure, keeping it like between the tech, the individual stocks, and these ETFs that are more, dividend focused, because this balancing act for me I think I slightly underperformed between the entire portfolio last year, not by much, because the markets rocketed up like 20 something percent, I think, but like my portfolio, I think, was up 18% in totality. I did have some individual accounts that did outperform, but in a total combination of the account, it wasn't like exceptional, but it was great. It was perfect. I was happy with it, but I want to excel, right? Like I'm looking for outperformance, kind of balanced volatility. And I kind of get it with this portfolio. And most of the dividend stocks or ETFs that I own them for a specific reason. I own them because I want to have cash flow in case I lose my job, if there's volatility in my work, but I also own them because I made a lot of money off growth stocks. Tesla, like before I owned SCHD, I made a shit ton of money on Tesla, right? But I always considered that these would be recovery plays. I really thought SCHD, VDY, I said, hey, look, like once they start cutting interest rates, the companies that are exposed in these ETFs are largely related to their interest rate sensitive stocks. And when they cut interest rates, these things should start doing exceptionally well. And unfortunately, we haven't seen that many rate cuts in the US. In fact, when the Federal Reserve said we're not going to cut rates that aggressively, SCHD plummeted. It got hit so hard. But VDY actually excelled the S&P 500 last year, and I picked it up at the best possible time that helped my accounts excel in performance because I did transition some of my growth. I think I owned Tesla that I traded there briefly last year, and I took a lot of those Tesla gains and I put them into VDY, and it was a really good kind of trade-off for the return that I got off VDY. Not as good as if I kept Tesla, but we can only play what we understand. And, I took a nice, I can't remember what I took a decent gain. It was like a 50% gain or whatever on Tesla. Should have been a couple, like 100 or more, whatever. It is what it is, right? But if we take a look, I mean, my accounts are up 1.5%. The S&P right now is only up 1.65%. So in totality, we're right right in line with the S&P. SCHD is helping drive the performance. It's up 4.7% this year, and VDY is just starting to get off the ground with 1.1%. So I have to, those are going to keep the entire count stable with the dividends. But what I want to see is these individual stocks like Google, Aduro, TELUS, Take-Two Interactive here really start to give me that oomph. I'm picking these individual stocks at times that I think can offer better than market average returns, but I'm doing it in a way that's kind of mitigated, and we'll talk about this here because it is intriguing. But some of you did point out that, hey, we're at the point where VDY is probably the only exposure you need, in my opinion, from the Canadian economy. But I hope all you maniacs kept some dry powder ready for the next 3 months. By the way, rates have to drop. This debt-heavy stocks are ready to move. As he pointed out here, stocks like the telecoms and Enbridge that we currently own, kind of in line with that conversation, right? And a lot of you have been pointing out, like, why is Google down? A lot of the individual stocks I'm picking are going through this period of volatility with tech in this massive sell-off that is starting to drag the performance, right? But I mean, let's start with Google, I guess, first and foremost. Google is one of these stocks where I think I get really excited about it. And I think a lot of investors are recognizing it for the value play that it is, but you still have to recognize there's risk. We're talking about a lawsuit that a lot of people seem to have forgotten is going on with the monopolistic behavior that Google implemented through Apple, being the primary search browser, paying God knows tens of billions of dollars to remain there for years, whatever. I don't think it's going to be that impactful to the bottom line. And I'm speculating that the stock is down for two reasons. Usually in big sell-offs with tech, Google gets hit pretty hard, especially when we're heading into market like fear. Anytime there's market fear, Google will sell off along with Meta pretty heavily just because they're advertising stocks, and advertising stocks in recessions don't do well because people obviously logically are going to spend less money on advertising. And we saw that. We did see that directly in 2022, right? I mean, if you take a look at Google's revenue here before we look at the price ratios again, sorry, let me look at revenue and profit. I mean, you can imagine that there was a period here where in 2022 when interest rates started to skyrocket, that their revenue flatlined. In fact, for the first time, I mean, there's only been 3 times or 3 quarters in their entire history where the revenue has gone negative in growth. And that's purely just because of fear, right? Market conditions, the pandemic, people weren't spending money on marketing. 2012, I don't know why revenue dropped. I'd have to look it up. But, during 2022, the interest rate cycle, there was a lot of fear about Google's growth. And that's why the stock can get shocked pretty heavily, but that also opens up a buying opportunity, in my opinion, because obviously the stock should always rebound. I don't think AI is going to replace them, which was my initial fear. I really thought ChatGPT could start stealing a lot of their market share. But I've recognized that Google remains strong. Gemini is great. They have a moat. They continue to be strong in AI. And when you look at their price to earnings multiple versus the growth they're currently experiencing on their net income or their earnings per share, I mean, they're trading down at a 21-ish, 22 times multiple. The only time that happened was in 2022 when there was no growth and their earnings flatlined. Keep that in mind. There was no earnings growth here, and their multiple was at a 19 or 20. Basically where it is now almost. And with the exception of the pandemic times here, and even then we only got down to a low of a 21 PE. You have to go back to 2013 to see price to earnings multiples this low on Google, which kind of, puts my jaw on the floor a little bit. And I just why is it down here? I couldn't tell you. Obviously there's always market risk. But I think if you're looking for a clear tech buy, if you're looking for individual stock exposure, do you need to look any farther? You're talking YouTube, self-driving, quantum computing, forget Google search. I mean, all their other businesses, cloud computing, they're huge. They're monopolies, right? I mean, they're not small businesses to be had, and YouTube will continue to grow. And I think all these businesses are high margin, truly just astounding. So I would be buying Google here. I'm debating on picking up a few more shares myself, though we do have quite a bit of an exposure. At 170, this is a steal, in my opinion. I could be wrong. Don't take that as financial advice. It's just my personal opinion. Are you able to do a similar video on Canadian banks or financial ETFs? So after I posted about the Canadian bank earnings, like Pokemon cards, collect them all. They're great stocks to own. They're resilient. Their payout ratios are low. The yields are high. They're fabulous businesses. But I always recommend buying HBNK. I think Zed or Zeb, ZEB, are 2 great ETFs if you want financial exposure. But the reason I think they're boring to talk about the financial ETFs, they're sector ETFs. There's 5 major Canadian banks, 5 or 6, right? Just buy them. You can either buy them individually or buy VDY. I won't buy them as a sector exposed ETF because VDY does a great job at weighting them correctly. And I think VDY has better performance. It's better performance against the TSX. It's kind of in line with the TSX, but I get broader exposure, higher yields, faster growth in the yields. VDY is an all-encompassed ETF for me, other than I do want exposure to some Canadian stocks, which I guess we can talk about real briefly here, because I think it's prudent to kind of talk about my short-term plays and how they kind of play into. I don't want to talk short-term play. I think there's a question here that came up that I want to kind of abbreviate to that really plays into this. First and foremost, one of you guys did ask me what was my estimate on Take-Two, and how much will it go up by? And I think this plays into this question, and everything that I'm talking about right now is would love to see your take recommendations on stocks that are held for shorter time frames. Many of us are retired and older, so we don't have a long time horizon. Now, I'm hoping if you're retired, you're looking at speculating on the market because you're going to have some gambling money to keep yourself entertained, and you have a long-term portfolio that you're not gambling with. But if you're looking for short-term investments, I mean, that's what I'm doing when I'm buying these individuals. At the end of the day, I'm looking for value. Every stock I buy should be called a value stock because I believe there's shorter-term value in it, and the market isn't recognizing it. It's why I bought Google. Google is the cheapest S&P top 10 company. It should be worth more than Apple is. It's growing faster. It has just as much net income. It is so underappreciated, I think, for YouTube and all that stuff, right? So I think buying it here is a good 5-10 year hold. I don't see anything wrong with that now that I trust that ChatGPT isn't going to take away market share. I'm fine with that. I'll ride it. We'll get through the monopolistic fines. I think the stock will rocket when people realize it's not material. So I see some short-term understanding on why I'm buying that stock. If it's just ETFs, I'm just going to cost average, right? But I want to talk about short-term time horizons and looking for excelled gains and like what I look at and how I come to understanding this, because I think you're going to have to be going against some grain. It doesn't matter if you're looking for short-term gain. It's really hard finding true value stocks unless you really understand the future of the business. If you can look at the short term and think something substantial is going to happen, Trump's going to tweet out that they're going to make Bitcoin the reserve cryptocurrency. If you can predict that stuff or you have a good understanding of it, then focus on those assets. You're only going to make money on things that you understand. Everything that I made killer money on is because it's something that I felt like fundamentally I understood, and I didn't get distracted by like the 1,000 other stocks that are being thrown at me every day, like Palantir and all this stuff, NVIDIA. I don't understand that stuff. I get that there's money to be made there short term. If you want to trade the momentum, go for it. But I don't play technicals. I'm not looking at day trading. I just have a really particular field that I find myself comfortable in. So let's use Alibaba. Alibaba is one of these stocks as an example where like you could recognize that this was a fabulous company that got caught up in a lot of political rhetoric. A lot of people hated on it. The stock got absolutely wrecked. We do not want to buy a stock that is going down. We just don't want to get caught in this cycle here. This is why we wait. And this is what I did with TELUS. And I think TELUS is a fabulous example of how I'm trying to do what's happening with BABA, but with this company here. I waited so long to buy this the way I'm buying it now because, again, you don't want to be buying it when everything is going wrong. If you recognize that it's a good foundational business and it's getting wrecked, let it get wrecked because it's not going to bounce back right away. They never do. None of the stocks bounce back right. After 2022, Meta didn't bounce back right away. Shopify, these stocks do not bounce back right away. So if you can find a company like Alibaba and you say, hey, I don't think they're lying about their numbers. I think all this Chinese political stuff is bullshit. I think China's going to do just fine. I think this is a cheap stock. So what am I going to do? I'm going to wait. I'm going to watch and wait for this company to get max pain and the stock stops dropping aggressively. And it kind of goes into these periods of a lull. And then from there, you're just going to cost average into it to whatever the position size you want, and then just wait. Now, there's no catalyst for when this thing was going to bounce back, but you could just say, hey, it's cheap. But then what ends up happening is, the rhetoric starts to change. People are like, oh my God, Apple's partnering with Alibaba. China's not that bad anymore. Xi Jinping is trying to fix China. They want to be more like growth oriented. Like there's so much going on all of a sudden. The rhetoric's changing. And oh my God, the stock jumped up like 80%. I mean, year to date, it's up 55%. These are the kind of stocks where you can make 100% over a 3 to 5 year time frame. And that is an insanely great return. You can double your money in 3 to 5 years. That's what I'm looking to do. Anytime I'm looking for a stock, I'm saying, hey, if I'm buying it at this level, can I make a better than market average return? And usually I don't know how to do that in a week, a month. I don't really know how to do it in a year. I need to understand like catalyst. I need to understand that, hey, like in 3 to 5 years, is something going to fundamentally change? Is it undervalued? Is there a possibility? Alibaba is that possibility, and it's proving to be. These are the opportunities. And I still think Baba is a good stock to buy here, but I'm not buying it right now anyways. But that's what I'm trying to do with TELUS, right? TELUS was one of these companies we followed forever, and we were just waiting for the rhetoric to shift. And now I feel like down here, we found the bottom. I don't think the stock's going much lower. Again, I could be wrong. These are just my opinions, okay? I mitigate it. It's not a huge position in my portfolio. I want to buy more Canadian stocks that are under bought or smaller positions, if not positions at all, in VDY. So I don't mind buying a few of them, right? We talked about it with Hydro One, Waste Connections. The Waste Connections will never go on sale. TELUS, I really like. I've always liked TELUS, but I don't like it when I know we're in a perpetual down cycle because of interest rates, restructuring costs, all this bullshit. Like, you knew this was going to happen. I don't want to be here for this. I'm not here to sit in this. Like, this is why when I buy individual stocks, you need to know what you're buying. I feel like I understand it well enough that I'll wait for the opportunity to make sense to me. And it makes sense down here, and it still makes sense at $22. I have no problem cost averaging it in here. And then sure enough, hopefully we'll see outperformance, because as the stock recovers, as earnings recover, the stock will probably go up more than people would expect it to, and we'll get a really good dividend yield. And then I can hold it long-term from here. I can, hold it for a while. I have no means to sell it, even if it goes up a lot. However, there are stocks that I look at where I don't plan on holding them forever, obviously, right? Like, there's shorter term time frames where I'm not going to like hold on to them if they start to rocket. Aduro is a good example of this. Aduro, I look at it as like one of two ways. This is a small cap company I'm speculating on. They have to convert some of their customer engagements right now. If they convert one client, I'm telling you, this stock will be worth over $1 billion. And I thoroughly believe that. Now, if the company remains strong and resilient, I'll probably keep some of the shares if I believe in it, because I still believe in it long term, but I need to see them execute. And because they've executed in the past, the stock's gone up a decent amount, right? Like in the last year, it's up 53%, right? Like, they've done really well since their IPO date. So this is a company where management makes sense. They know what they're doing. I trust the IP. I don't think it's vaporware. For those that don't understand Aduro, it's just basically like they're using something called hydrochemolytic upcycling, basically taking plastic and everything on your desk, anything that's plastic, being able to reconvert it back into oil that is usable. And they have like 95, I think over 95% is like renewable. So they can take plastic, make 95% of the material that gets converted to oil reusable. So only like 5% of waste or less. Like they know I think they know what they're doing. So we'll just wait and find out, right? There's a lot of good catalysts here. So this is kind of like another short-term play that I believe in. Take-Two, I think, is a really good example of a short-term play. And this is catalyst related. So Aduro is more like management and execution, right? Like, we're waiting for management execution. I have to believe that they can do it. We'll see what happens. Something like Alibaba, TELUS, those are stocks where I'm looking for bottoms, because I believe in the long-term understanding of the business. And I think the market has disconnected from the underlying fundamentals and where the business can possibly go in the future. Those are long-term, foundational, buy them on the dips and be patient, right? Take-Two Interactive is purely a catalyst-related short-term play. I think Take-Two is a stock that is largely priced in a lot of the potential the games are going to release, but I think analysts are under anticipating the reality of GTA 6. I think it's going to be a far bigger game than people have priced into the stock. And, I've talked about this a lot, but Take-Two isn't a company fundamentally you can look at and be like, ooh, this is impressive. I mean, they've been diluting shareholders. The revenue is flatlining. They're guiding for basically the same revenue they've had since 2022, 2023. Right now they're spending an ungodly amount of money. So if you look at their net income, they have been spending billions of dollars, arguably on probably servers and getting everything ready for GTA 6. I mean, they're making a huge speculative bet on this game, right? But the question is do you believe in that? I've done my due diligence, and I believe the game is going to do great. I think it's going to do better than people expect it is going to do. Because I've listened to analysts, and analysts think the game's only going to generate somewhere between $3 and $4 billion in the first year of its release. A lot of people are saying, like, there's articles only just coming out now saying, hey, they expect GTA 6 to do better than GTA 5 that did 30 to 35 million copies within the first few months. Keep in mind, this was back over 10 years ago. It sold 30 to 35. If they do that again at over $100 a price, I mean, there's $3 billion they'll make off 30 million, but I think they're going to do far better than this. I think they're going to sell 50 to 100 million copies in the first month. I wouldn't be surprised if they do 50 million in the first day. I wouldn't be shocked at all. This is a downloadable game. They don't have to go buy a physical copy. There's over 100 million Xbox XSs or whatever and PlayStations out there for the versions they're going to be able to play this game on. I really think that this game will easily generate $5 to $10 billion in the first month. I think that's going to drive a lot of hype. I think the news is going to talk about it. Bloomberg, every fucking finance person out there is going to be like, oh shit, the retail trade at the end of the year, the holiday trade of the fucking year. And the stock is going to go up to like, probably, I expect an easy double. I think it could be a 60 to $90 billion market cap. If hype really takes control, it could be $100+ billion. And the only reason I'm able to come out to those conclusions is because the company trades at about 6 to 7 times revenue right now. And at 6 to 7 times revenue, if they're going to do 5 billion and I'm expecting them to do 10 to 15 billion, and again, you're looking at 6 to 7 times. I mean, again, that's 60 to 90 billion in value. If we're just going to keep it those valuation rates. Now, those tend to fluctuate, obviously. There's no guarantee of any of this, but I think the downside risk is limited because of the hype in general. Even if the game doesn't sell that well, it could still go up just because of the hype. And I don't plan on holding on to this for that long after the release. I might start slowly selling out of it into Q1 earnings. That's my game plan anyway. So that's kind of like the 3 ways I look at short-term plays. You're either looking at your dip buy opportunities like Alibaba, where they're great foundational companies like Google, Alibaba, market's underappreciating them. Even though Google's up a lot, it's still very cheap. I mean, it's trading at almost the same price to earnings that Alibaba is. Keep that in mind, right? For a tech company like Google, it's crazy to me, considering their forward PE, I think, is like 17. I think in 3 to 5 years, you're making great money on Google, right? So you can look at those opportunities like TELUS, right? Like if you believe in the company, buy the dips. Those are the opportunities. If you understand catalysts and you understand companies and you've done your research, companies like Aduro, a lot of companies you'll find out there, if you believe in the management, you think they're executing. I think you could look at things like Robinhood. There's so many companies out there right now where I see similar opportunities to management execution, the vision, the large market opportunities they're chasing. And if you think they can execute in the next 3 to 5 years, you could be printing some real dollars, right? And then again, obviously, we're talking about catalyst related. If there's catalyst you understand in the market, like the MJ boom, for example, like the MJ boom was an easy catalyst. Saw that coming, held on to Canopy for 3 years, made a small fortune. Anytime you can find a catalyst that you think you understand, that's where real money gets made, in my opinion, real speculative money, because that's where you see those 500 to like 1,000x returns. I'm not saying Take-Two can do that, but if the market stays strong and we get that kind of hype from that game and it sells the way I think it's going to sell, it could easily drive that up to 100 billion value. I'm looking to turn I want to get about a 40K position. And I did buy a lot this week, actually, when it comes to Take-Two. How much did I buy? I think I bought like 10 grand worth this week. I've got about $35,000 in the position so far. I want to get it closer to 40 or 50 because if I'm expecting a double, I do want to see it try and become a 6-figure position before I sell it. I'd like to turn like 40 or 50 grand into 100,000. That's the goal anyways. Don't do what I'm doing. This could be completely wrong. And I could I'm not going to blow up my account. Obviously that's a pretty mitigated position to our total assets. I mean, between the wife and I, we have over $1 million in assets. So it's still a pretty small position in totality, but keep in mind, only risk what you're willing to lose. Keep that in mind. That's why I keep my individual stocks to a reasonable position so I can focus on the few and cost average into the many. That's a good quote. Focus on the few and cost average into the many. I will always buy the S&P, SCHD, VDY. I'll keep cost averaging into those, but I'll concentrate a few stocks I think I understand it. That's how I play this game. Let's get into a few Q&As here before we finish up. Tariffs will make natural gas go up, but shouldn't affect utilities. You're going to have to explain to me what you mean by that. That's a fascinating explanation. Is it because the U.S. is importing a lot of natural gas? Be an interesting conversation. That was quite the drop of TFI. I've been a holder of Mullen Group for some time. They're in the same industry, but much smaller market cap. Definitely tough times for the industry. I don't know that stock too well. I'll have to take a look. We are in early stage on a recession by experts that call the last recession. But who's the experts? Every year I've heard there's going to be a recession. For as long as I've been investing, there was somebody telling me we're going to head into a recession. You remember when interest rates went up, we're going to go into a recession. Did we go into a recession? No, we didn't. I think tariffs could put Canada into a recession. Maybe the U.S., debatable, but companies' earnings were great. How are we going to go into a recession when companies are crushing it right now? I don't try and predict the future in the aspect of economic recessions or crashes. You will lose that game. 99.9% of the time, you're going to lose that game. You're not Michael Burry. I'm sorry. Even he almost lost that bet. Let's be real. Trump can't control the sellers in Asian markets, 70,000 incoming. You really think we're going to see crypto drop that much? Is that what you're talking about with Bitcoin? Potentially. P&G, Kraken Robotics. Yeah, the robotics play is interesting. You guys doing the robotics? I do like seeing what, a lot of the robotics companies are doing. I do keep up on it a lot. Like Figure AI is super cool. I don't trust there's a business model just yet for them, and they're going to be purely hype for like stock-based returns. But buy more Aduro. Excellent results on many processes. If their yields are half as good as they expect, we're in awesome shape. I'm very optimistic on execution. So am I. It's a fascinating play. Bloomberg saying too many betting 70,000 will hit highs, and Trump is all talk and last. Yeah. Sure. Same with the crypto stuff. Kyle, what about Hood? Hood's an interesting stock. I mean, I don't play it personally. I don't really play things like Wealthsimple either that you could own through, what's the company here in Canada? If you wanted to own like Wealthsimple, the trading app, I think it's owned by Power Corp. POW, I think is the ticker. I don't play a lot of the financials individually, but Hood has some potential. I mean, they're looking to expand into real estate, everything financials. They do a great job at capturing hype, in my opinion. They're much quicker to move than the bigger financial institutions are. They're more nimble. So I think they're good. I think they were good to buy on some dips or weakness if you believe in the long term. I find this stock interesting. Aduro does have patents, obviously. They're not. I think they're a leader technology-wise in the industry, but they're not the first mover. I think Pure Cycle is one of the bigger first movers. There's a couple companies in the space, but there'll always be a couple companies. I think they'll still be one of the big players in the long run. But what else we got here? PFE, you're a Pfizer fan. The best with earnings getting better. Yeah, I love Pfizer because it sits in SCHD. Pfizer, medical. Like I said, I always think anytime somebody makes me bearish on SCHD, because I've heard all the criticism. I've been holding SCHD for years now, and like I hear so much criticism and so many people shit on it for its performance, but I hold it for a specific reason. And anytime I get bearish on it, I just go look at the holdings. And I'm like, I would own a lot of these companies individually. Like they have Hershey's in there now. Like there's so many companies that I would like to own individually. And I said, hey, I don't need to do that. I can just keep cost averaging into SCHD, and I can do that comfortably. And I'm getting a great yield, so I don't have to worry about it. I put most of my funds into XQT. Yeah, best thing to do, man. If I make bank on my Take-Two Interactive money, all of that money is either going to go into VT or XQT. By the end of this year, like I'm still looking to build out what I'm calling my FU money portfolio, or my long-term wealth preservation portfolio. Like I'm in a place now where most of our portfolio is still mitigated toward growth. Like between the wife and I, honestly, like more than 20% of our portfolio right now is in individual stocks. The rest of it, most of it is in the S&P 500, SCHD, and VDY, and some other ETFs. So, 80% of our portfolio is ETFs, 20%, probably just over 20 is speculating on individual stocks. Those individual stock plays, if they take us to the moon, I'm taking those moon shoots and I am diversifying the hell out of my portfolio to continue to build legacy retirement wealth. And that's always been the kind of the play, right? That's what I've done through most of my investing career. Anytime I make a big gain, I cost average it down or sell out of it and then diversify it into other stocks. And I've done that repetitively. Now, if I was more concentrated, I'd have way more money. But at the same time, I also haven't blown up my accounts. So, I've made way better than market average returns. I have excelled probably most YouTubers out there. I don't know too many YouTubers that have my kind of returns. Maybe Dumb Money with the exception. Those guys crushed it. I don't have those kind of returns, but I've done very, very well. And the reason I continue to do well is because I diversify. I concentrate the risk, keep it mitigated, and I diversify. Anytime there's big gains, baby, you got to take some of those gains off the table. It's worked very well to my advantage. Because like I said, I didn't see the downside a lot of people saw in 2022. I've been through a few correctional periods and they didn't hit my portfolio. So, I mean, look at, like, I didn't hold into the MJ boom. You make a lot of money, man. Lock in that bag. There's nothing wrong with locking in a 500% bag. I know a lot of people, you don't want to be like the Dogecoin millionaire, who's no longer a millionaire, I don't think. I haven't looked into that story. He's still holding Doge. I don't even know. What's your average price on Google? Our average price between the wife and I, because we both own it, is I think around 180 is our average buy. And I'm comfortable at the 180. It's nicer if you can get it at like 150. I hope it hits 150 or lower. That would be a fucking dream, but it's probably not going to happen. These are, again, when I buy individual stocks, I want them to go down. Like, keep that in mind. It's exciting when they go up when you just buy them, but like even Take-Two Interactive, I want it to go below $200 because I recognize in the future it's going to be worth a hell of a lot more. So if I can buy it for a hell of a lot less, I'd be a lot more comfortable with that. I mean, like, I don't mind seeing it drop 10 or 20%. It would make me, if anything, more excited because, again, I see a future in it. I would like to move to Canada, but if O'Leary is prime minister, maybe I'll still move to Canada. You still have checks and balances in you constitutions there, yes? I don't know. Honestly, like, this is the mixed problem with politics because, like, I think Trump's a clown. I think a lot of the shit he's doing just doesn't make any sense. I think logically, I don't know if he's playing a game, if it's chess to him or what the hell it is. But then again, you look at something like Doge, and I get Doge. Like, I think it's good to rip through the government and get rid of the wasted spending. In Canada, we got a lot of wasted spending. I think Canada spent like $100+ million on an app that didn't work for COVID. Like, and there were so many lawsuits over that. Like, but Canada's great. Don't get me wrong. I love it here. We have just as many problems as the US probably does politically, but I love Canada. It's a great place to live. It's an easy place to get rich, especially if you can work internationally. A lot of people always shit on our tax system, but I promise you, Canada, if you know how to work the tax system, it's really easy to get rich here. And honestly, I think it's easier to get rich in Canada than it is the United States. Because anytime people talk about tax, they don't take into consideration RSPs, TFSAs. I mean, we have so many tax advantage accounts. Our corporate tax rates are very comparable to the United States. A lot of ways to take advantage of our tax systems if you're smart about it. So what I always recommend is if you can live under the Canadian tax code but make US income, that's like the best thing imaginable, because that's what I do. I know some people here do it very successfully. You can operate selling products to the US and you get even better tax benefits, which is crazy. But anyways, apparently there was insider 2 to 3 hours before Trump's tweet. Yeah, we were just talking about that. Earlier on in the stream, if you missed it here, we were actually just sharing the thing here that somebody bought 123 million long that was 50x leveraged. So somebody was saying that, there's some serious insider trading, which, let's be real. When you look at government returns, there's probably a lot of insider trading because politicians outperform Warren Buffett, which doesn't make any goddamn sense. Kevin O'Leary, no thanks. I honestly, I'll give you one story to finish up with Kevin O'Leary, because there was years and years and years ago when I started investing, before there was YouTube. There was no Graham Stephan, Meet Kevin, none of this shit. Didn't exist. I had to learn this stuff for myself. Thank God for my mother. My mother got me into the stock market. A humble sheep farmer somehow got me hooked on the stock market. And I remember watching, I think it was BNN, and Kevin O'Leary was on, and they let you call in. And, I vividly remember calling into BNN and just so excited to talk to Kevin O'Leary. I was asking about, like, what do you think about Apple and and Coca-Cola stock? And he's like, I think Coca-Cola, people are changing habits, might not be that great. Apple's a great stock, blah, blah, blah. It was just stupid questions that I could have answered by myself. But I was just so happy to talk to this guy. I admired him back then. I admired his story of always buy stocks that pay dividends and all this stuff. Anyways, time goes on, right? And I think one of the biggest realizations that I had that changed my whole perspective on investing is whether you have $100, $1,000, or you have $1 billion, you are plagued with the same problem. And that is, nobody knows what the hell to buy without knowledge. And, me being a little kid, like an idiot, and just trying to find places of return, I was banging, man. I caught Canopy Growth Corp. I was finding great stocks that were just propelling returns. And I realized in this industry, it doesn't matter how much you're investing. The respect comes from your knowledge and, actually executing and building out returns. Because, if you can see a kid that's doing 30%, 50% returns a year, nobody cares about the dollar amount. They're just like, how the hell is he doing that, right? So you can get respect from any billionaire if you just know something they don't know and you know how to execute on it. You will immediately get respect across the entire financial world. And when I watch Kevin O'Leary just do dumb shit over and over again, promote things like FTX, and I watch billionaires make mistakes constantly, Warren Buffett that buys Taiwan Semiconductors and then sells it the next quarter right before the moon shoot, even though which made no sense. I'm just saying, everybody's going to make mistakes, and it's such an even playing field. And that's why I've always loved the stock market, because I always admired these rich people. And then I realized there's nothing to admire. There really isn't. You can't admire people that have money. It's just sometimes they made money in a good way. It's great. But people like Kevin O'Leary, they're business oriented, and they're probably like Trump, and they're very, I'm going to say, malicious to some extent, because you kind of have to be when you're operating businesses. Can't care about employees as much as people would like you to. People fire people regardless. It can be a very tough, cutthroat, disgusting industry to some extent. And we've seen it with these people. I mean, we've seen Kevin O'Leary take ungodly amounts of sponsored money to promote FTX and horrible businesses that cost probably people thousands of dollars. Happens all the time. It's part of the industry, right? So I just feel like, in this nuanced realm of the markets, I hope people see it that way. And they're like, hey, anybody can get rich with knowledge. That's what I'm saying. You have to be a glass half full guy always. So one more comment that I want to put to on that bear comment, because anytime you go down that bearish mindset, you start believing the world's kind of like a glass half empty. And when you look at the view of the world through a glass half empty, you'll only ever see negative you'll always, it's kind of the idea of what's it called, like confirmation bias. You'll always just kind of chase information that kind of confirms your biases. Whereas if you're a glass half full kind of guy and you're always looking for opportunity and you believe there's endless amounts of money out there, there's industries where money is just fucking raining down and I could be a part of that industry. I just got to go out and find it. I just got to educate myself and enjoy the process. You will find it and you'll get those opportunities and you'll make money. You just got to be intelligent about it. So on that note, folks, stay cool, stay awesome. And as always, I look forward to catching you in the next one. Peace.